with Chapter 1, the Understanding Financial Accounting. How many of you guys are a little scared of this class? You know, it's unfortunate, but it can appear to be a scary class. That is why we're going to go slowly and grasp the concepts. And it's like with everything in life, it really, once it clicks, it all will make sense. My job is to hang in there with you until it starts clicking for you, okay? Sorry. I got too many things I'm trying to get in here. So we are going to talk about accounting. The learning objectives, we're going to go through, so I'm not going to worry about those for you. Accounting. Many people think accounting is all about numbers. Well, it clearly has numbers involved, but there's a lot more to accounting than just about numbers. Basically, what accounting is a way we gather information and we communicate this information to users. Now, we communicate it to users by taking certain transactions and measuring them and analyzing them. And that's what this class is all going to be about. So accounting is not just a numbers game. It's a way we analyze transactions through measuring them, and then we take that information and report it to end users. There are people who need information that we provide in many facets. So, for example, investors, people who are out purchasing stock, they oftentimes utilize the accounting information that CPAs provide. They look at a couple companies and they decide, based on the information we provide and possibly through ratios and analysis, which company am I going to invest in? They determine that by the information we present. Creditors, banks, if a company is getting ready to go under, is a bank going to lend them money? Hopefully not. Customers decide whether to purchase products from certain companies. Suppliers decide whether they want to sell to companies because are they going to pay their bills? Managers make decisions. Employees decide employment opportunities based on how companies are thriving. Competitors check it out. Regulators make laws based on financial data. Tax authorities, being a CPA, they use your financial data for companies to determine the sales tax if you in fact have paid the right sales tax or paid the right income tax based on financial data. And then also local communities can utilize certain ordinances based on the financial statements. So there's a lot of people out there that utilize the information we're going to provide. As you see here, investors decide where to invest. Creditors decide who to lend money to. Local communities decide on environmental issues. And ultimately, all of this is done so people have information that helps them make decisions. This is now what we're going to talk about, what we call the framework for accounting. In order to make decisions, investors, about companies, companies create various transactions. We take those transactions or activities and we measure them and put them into a format that makes sense, so in turn we can communicate it to stakeholders or investors who then again can make decisions, and the cycle or the circle continues on and on again. How many of you guys are going to be required to take managerial accounting? Just a couple of you? Managerial accounting deals with creating financial information for those internal users inside the company. Financial accounting is more broad-based. We're going to create data that provides information for external users, for investors, for banks, for the public at large, for the IRS, for people to make decisions. Do I want to do business with this company? So the focus on this course, as you think about the users of financial accounting and learn more about these business activities we're going to talk about today, we're going to focus every transaction on how is the business activity being measured and how are we going to go about taking that information and communicating it. So Zach, you get to pick the first person that is going to answer this question. Who do you want to pick? You can point. If we're going to learn names this way. Chase? Travis. Travis, raise your hand. Travis, you're the hoarder of the papers, right? Good. No, did that offend you? No. Oh, good. Okay, Travis, will you read it? The question and the choices. And then Travis, if he needs help, he can take a lifeline. The whole thing.
Process of measuring income taxes owned in government, system of maintaining communication with company's customer and suppliers, procedures designed to enhance the company's image to potential investors, measuring business activities and communicating them through external parties.
What do you think? Travis?
D.
You're getting help. D. How many agree? Are you sure? You're right. D is measuring business activities and ultimately communicating those to external parties. Okay, Travis, you get to pick. Yes.
Is there government accounting as well?
Yeah. There is government accounting. There is auditing. There is forensic accounting. There's all kinds of things. Government accounting primarily just deals with the government, the federal government, and the state, along with not-for-profit organizations like hospitals and agencies. Why we don't teach it? Well, right now we don't teach it in this school because those who go on to a higher level, that's usually a higher level course. But the reality is government accounting and nonprofit, a big percent of jobs are there. And I'm just really surprised we don't put more emphasis on that. Because I would say 35 to 40% of people who get hired in the government, counties, states, federal government, or in nonprofit organizations like a Red Cross, like United Way. Everyone needs accounting, and it's a different animal how we handle nonprofit. Okay? Did I answer that okay?
Yes.
Okay, so Travis, you want to call on the next person for this next one?
George.
Who? George. Yes, sorry, George.
Oh, yeah. Another question. Financial accounting does not deal with which of the following? A. Measuring a company's economic activity. B. Providing information to internal users. C. Preparing financial reports. D. Communicating financial resources to investors.
It does not deal with which of these? Someone help George. Perfect. Why? The word internal users is for managerial accounting. Okay? So we're now going to talk about various types of activities that we measure when it relates to financial accounting. And the way we're going to do this is we're going to create a golf academy. How many of you guys are golfers? One. That's how many I had in the first class. One. Well, this particular company, and the only reason we're doing this is because it was in your textbook, is Eagle Golf Academy. Eagle needs money. We all need money to do anything in this world, don't you? But to start a business, he needs money. Eagle needs $35,000 to get the business going. So Eagle has decided to issue 1,000 shares of common stock at $25 a share. Eagle has people who love him. He's got Grandma and Grandpa Q, you know the grandparents are suckers, to invest $7,500 in his venture, or have ownership, I should say, of 300 shares. Eagle Eye Ed invests or purchases 100 shares for $2,500. Eagle Eye's parents, $7,500. Bogey Boy the friend, $5,000, and then Sucker the coach invest $2,500. So all of this totals $25,000. But how much does he need? So what's he going to do? Borrow some from a bank. Okay? So the way we measure activities, do you see that this was an activity that occurred? He went out and issued shares. People bought his shares. He borrowed money from a bank. Those are activities. Our job is to analyze those activities and measure them and put it into some form that's going to be relayed to or communicated. So what we're going to do is show in this process of these activities, cash got increased $35,000, didn't it? How did it get increased? By two means. We borrowed money from a bank for 10, and we increased our stockholders' equity because now we have stockholders, our shareholders, that invested in the company of $25,000. So we're basically taking a business transaction or business activities, and we will analyze those activities, possibly use source documents to make sense of them, and communicate them. The way we begin to bring this data together is through something that we call journal entries. We're showing cash was affected $35,000, liabilities were affected by $10,000 because of a note to the bank, and then stockholders' equity also increased $25,000. Now, Eagle needs to go and purchase equipment. So it needs $24,000 of equipment. What happens then? It went and purchased $24,000 of equipment. Didn't something change now? Cash is down $24,000 and equipment is up $24,000. So, correct. So this journal entry shows equipment increased $24,000 and cash went down $24,000. So you see here, after those two events occurred, we now have cash remaining of 11. We have equipment now of 24. Do we still have the same amount of resources? 35,000. They're just not in the form of cash anymore. They're in various forms. And our creditors and investors, those claims to those resources still equal 35,000, don't they? So do you see, after those two events, we found a way to understand and measure what occurred. We created transactions or journal entries to record them. And after those two transactions, here's where we stand. This is the most important piece of tonight. There's a lot of important pieces, but something you're going to learn that's called the accounting equation. The accounting equation is assets, which are also known as resources, equal liabilities, or amounts we owe to people, plus stockholders' equity, or the amounts we own. So the liabilities are people we owe money to. The stockholders' equity are those individuals who own pieces of the company. Okay?
So liabilities are actually assets as well?
No. Assets are cash, equipment, buildings, and furniture.
Like things of value, right?
Things of value. They equal. The assets equal. Assets will equal monies we owe plus stockholders' equity. Monies we have into a business.
Oh, I got you. So like, say they're like, if you would have had like the angel investors, right? Like the Graham and all those guys.
Mm-hmm.
So like, the money they put there
is cash.
Yeah. Oh, I got you.
And that money came from stockholders' equity. Right. The bank gave us cash, but we owe it back to them. Does it make sense? Thank you for asking George. George, right?
Yep.
See, I'm going to remember one name tonight. George and Zach. And Travis. I'm writing it down so I don't forget. Okay, so moving on. The cash and the equipment are the resources, those assets. Assets are basically resources that will provide a benefit to the company for more than just this year. Okay? And then claims to the resources are people we owe money to, and then if the business goes under, the stockholders' equity get the assets, right? The resources. So another way you could look at it is move the equal sign and show assets minus liabilities ultimately equal stockholders' equity, right? So, assets are resources of a company. Liabilities are creditors' claim to resources, and stockholders' equity are the owner's claim to those resources. So as you see there, assets, we can say assets minus liabilities equal stockholders' equity. So we're already learning how to measure things. We're taking certain categories and determining what they mean. Now we're going to take it another step. We're going to talk about 3 other accounts. One called revenues, one called expenses, and one called dividends. All profits of a company get ultimately claimed by the stockholders. So profit is going to be revenues minus your expenses. The monies that a company earns minus the expenses that go out to the expenses incurred in making that money. Profit can also be called net income. Revenues are sales of products or services. Expenses are the costs of selling those products or services. Dividends are the distribution of that net income or profit to shareholders or stockholders. So if you've ever owned company in a stock in a company, basically the stockholders are the ones that own the company. Now the company operates independent of the stockholders, and if there's net income, there's usually an opportunity for the management of the company or the stockholders of the company to determine they're going to issue a dividend, which is a piece of the profits back to the stockholders. It doesn't always happen. There are some companies that don't issue those profits back because they're trying to grow the company. So for example, when Apple was first starting, Apple, you know, iPhone Apple, Mac Apple, you know what I'm talking about? When they first started, for probably 15 years, they never issued a dividend because their assets, their profits, they kept it in the company to grow the company. And then after a while, I think stockholders also started complaining, and so they started sharing in the pie. Does that mean that Apple, the stockholders, never made money? No. How did they make money? They bought the stock, but that stock was so hot it just kept growing and growing. So the way they ended up making money is they bought it for a certain price and 2, 5, 10 years later sold it for a much higher price. It's one way of acquiring wealth or income from a stock. Another way is through dividends. So here we have Eagle Golf Academy, the first month of business. We show it has $3,500 in revenues, and it has expenses of salaries, supplies, and miscellaneous. Now, I want you to know that expenses are costs to make the revenues. Salaries, when you pay salaries, do you have anything to show for it next month? Hopefully a happy employee, but you know, you pay someone in order to provide a service and you use it up. Rent expense is the same way. Salaries are also the same way, supplies are also the same way. Excuse me, I'm trying to think what my and that they're costs that are incurred to make the revenues. So we show revenues of $3,500, expenses of $1,000, supplies of $500, miscellaneous expenses of $750. We are going to create what we call an income statement. This is a financial statement many people hear of. It communicates what our revenues are for a period of time, what our expenses are, and what the net profit is. So as you see with Eagle Golf Academy, we have revenues of $3,500 minus our various expenses. What is our profit? $1,250, which is also called net income. Do you see what we're doing? We've already begun learning how to take transactions and measure them by certain categories. We're learning what it means to have an asset. We're learning what it means to have a liability. We're learning what stockholders' equity is. Those three measurements, assets, liabilities, and stockholders' equity, make up this accounting equation I told you was really important. Okay? And we're learning revenues and expenses make up the income statement. Then there's distributions to shareholders, which we're going to talk about how that plays out down the road. But we're learning that all items have to fit in here somewhere. Okay? They're ultimately going to fit in here in some manner. The measurement role of accounting is to create a record of the activities of a company. To make this possible, a company must maintain an accurate record of its assets, its liabilities, stockholders' equity, revenue, expenses, and dividends. So, George, do you want to call someone? Or did you call on someone? Where's my pen?
Oh, you lost my pen?
No, it's down here. I got it. Sorry, I have it. I know, I was getting scared. So George, you want to call on someone?
Yeah.
Where's Zachariah? No, he's Zach. Yeah, that's getting me too confused. Look, I'm really trying to get Zach. All of a sudden, Zachariah, although I do like that name, Zachariah. Let's keep it simple, dude, okay? Okay, wait, Zach already was called on. No, you can't be playing favorites. I told you we don't play favorites in this classroom. What?
I called on someone. I called on Travis.
Oh, that's right. Zach, you're going to answer 2 questions now. Okay, move on, Zach. What's the answer to this one?
Okay, the resources of a company are referred to as liabilities, revenues, assets, or expenses. Assets.
You rock, brother. You're doing so well, I think you need to do another one.
Oh!
The amounts recorded when the company sells products or provides services to customers are referred to as liabilities, revenues, assets, or expenses.
Someone can help Zach. God, you rock. You want to take my job? Okay, let's talk about this little matching exercise. Land owned by a company. Zach, calling someone. You can point and make them say their name. What is your name?
Austin.
Austin. What is land owned by a company? An asset. How many agree? Awesome. Okay, Austin, take another one since you're rocking it. How about amounts owed to the bank? Maybe we just keep going with you, dude. How about common stock issued to investors? I'm going to give you another chance. Common stock issued to investors. Stockholders' equity. He's just getting nervous because he's batting it all. This is like want to be a millionaire. Okay, who wants to take payments made to stockholders? Austin, I'm going to let you finish that one because you kind of hinted. That's the dividends. Okay, next. I saw someone raise their hand back there. What is your name? Javon. I'm sorry I keep asking. Javon, what about cleaning services provided to customers? You rock. And then workers' salaries for the current period? Awesome. Is this making sense, kind of? How about we